Jeff Schneller with Corby Mortgage, and today I want to talk about the cost of credit reports and also trigger leads. So to get started, credit reports in 2025, I would say probably on the low end, maybe $100, and on the high end, maybe $175 for a joint report. It's just too much. And no, the mortgage companies are not adding fees on to kind of make up for some losses or to try to make a couple extra dollars. These are actual invoices from all the different credit bureaus out there that we would get credit from. So just the costs keep rising from Equifax, TransUnion, and Experian. They're charging a lot of money, and it's getting passed on to the consumer. So I would say 5 years ago, a joint report was maybe $50, and now it's could be 120 to 100, 150, like I said, and it's just too much. On top of that, which leads to my real point, is that I want to talk a little bit about trigger leads. And so these same companies, Equifax, TransUnion, and Experian, not only are charging outrageous amounts of money for their credit reports, they are then selling that information once a credit report is pulled to other banks, so they can now harass clients, which is absolutely insane. So once we pull a credit report as a financial institution, not all of the information on that report is sold, but just perhaps the name and a phone number that a bank did pull their credit, which then creates a barrage of text messages, emails, and phone calls for probably anywhere from 1 hour after you pull the credit to maybe 3 or 4 days. There was one instance where I had pulled credit and was talking to a gentleman, and we actually had to get off the phone because his phone kept blowing up with phone calls, and it's outrageous. There's some legislation going on right now, and a lot of the big mortgage companies are trying to fight this. The credit card companies are saying, "Hey, this is creating equal competition, and this is great," but the reality is that's just crap. It's not creating equal competition. All it's creating is harassment from a bunch of different vendors and banks that are buying these leads. Those people are scumbags, and they have no business in the mortgage industry. Go out and find your own clientele. We're not afraid of competition, which is what the credit bureaus will say. This creates competition. It's not competition. It's just harassment. Consumers these days can find out what interest rates are. You can go online. You can call a couple of banks that have been referred to you by your real estate agent. So there's plenty of ways to find out what a competitive rate is. You don't need 55 to 75 phone calls in a 2-day period to find that out. And no, they're probably not very well qualified individuals. They're probably new in the industry, sitting in a room somewhere in California smoking bongs and just trying to drum up a lead. So this is the trigger lead issue, and there is a way to stop this. And the Consumer Credit Agency has a phone number that you can call, and will stop this consumer credit or these trigger leads. And that's 1-800-5-OPT-OUT, OPTOUT. And that number translates to 1-888-567-8688. So what I do is I generally take an application from a client, wait a little bit, and then insist that they call if they want, and opt out so they're not being harassed. So I hope this provides just a little bit of information about what a trigger lead is, and happy shopping for a mortgage.